We just locked a client at 5.75% with no points on their Palma home purchase. That's not a typo. 5.75% and no points. Welcome to the 5-Minute Real Estate Fix. I'm Chase with the Whitney team and First Team Real Estate. And after 3 years of rates bouncing between 6.5% all the way to 8%, we're finally seeing what everyone's been waiting for: sustained rates at or below 6%. Here's what's actually happening right now in Orange County and what it means if you're thinking about buying or selling this year, and why the next few months matter a lot more than what most people realize. Everyone's talking about the numbers. The numbers tell a clear story. As of January 6th, 2026, the 30-year fixed rate mortgage sits at 6.25% nationally, with some Orange County lenders offering rates as low as 5.75%. Compare that to where we were just 12 months ago. Rates between 6.9 and 7.1 in January of 2025. That alone is a 70 to 85 basis point improvement, and it changes the math entirely. On a $900,000 loan with 20% down, the difference between 7% rate and a 6% rate is almost $470 per month in principal and interest. That's $5,628 per year, or over the 30-year mortgage, $168,000 or more in total interest saved over that time frame. But here's what most people are missing. It's not just the rate itself, it's the stability. Rates have been trading in a narrow 6 to 6.3 band since mid-September of 2025, with minimal week-to-week volatility. That's over 3 months below 6.5% as of early January, the longest stretch since the Federal Reserve finished raising rates in July of 2023. For the first time in years, buyers aren't watching rates swing wildly while they're in escrow. And for sellers, that stability is unlocking buyer demand for buyers that have been waiting on the sidelines. Stephen Thomas, Orange County's leading housing economist, just released his latest reports on housing analysis on January 5th, and the data shows something interesting. Across Orange County, active inventory sits at just above 2,700 homes for sale. That's down 14% in the last 2 weeks, but up 13% compared to January of 2025. Buyer demand shows just over 950 pending sales in the last month, which is almost identical to last year. Expected market time is at 85 days countywide, the highest start to January since 2020. And mortgage rates right now, like I said, are at 6.19%, marking the longest sustained period since 2023 below 6.5%. The pattern is clear. Every January, the Orange County market starts frozen. Holiday hangovers, New Year's resolutions, general distractions. It keeps both buyers and sellers on the sidelines. Then, like clockwork, the market thaws. By the end of January, demand accelerates faster than supply, and competition heats up through mid-March. This year follows that same script, but with one critical difference: rates are cooperating. In 2023, rates dipped below 6.5% for 36 days before spiking above 7% in early March. In 2024 and 2025, rates were above 6.5% through the entire winter and spring markets. This year, rates are positioned to remain between 6 and 6.5% during the prime buying and selling season, which is mid-January through early June, for the first time since the Fed finished raising rates. And the Orange County housing market remains rate sensitive. When rates climb, demand slows. When rates fall, affordability improves, demand rises, and the market speeds up. Lower rates unlock demand, and demand is what we're all waiting for. Right here in Cypress, the market is showing its typical early year slowdown, but the fundamentals remain strong. The median home price hovers just over $1 million to around 1.1, up 0.3% year over year. Properties are taking about 45 to 57 days to sell on average, with homes receiving an average of 2 to 3 offers. Homes are selling 1 to 3% below list price, which reflects a more balanced market compared to the bidding war frenzy of recent years. But much of that depends on where the list price starts. Stephen Thomas's data shows that Cypress specifically is sitting at an expected market time of 39 days, significantly faster than the Orange County average of 85. And that tells you something important. Well-priced homes in Cypress are moving. The market isn't rewarding overpriced listings the way it used to. Price it right, present it well, and you'll see activity. Overprice it and you'll watch it sit while buyers move on to the next option. Now, all this to say, if you're a buyer, don't be fooled by the sluggish start this year. In January, inventory grows week over week, but buyer demand grows at a faster pace. There will be increased competition among buyers, especially in the lower price ranges. Very few sellers are desperate to sell, especially with the dawn of a new year and the upcoming spring market, the best time of the year typically to sell. If you've been waiting for rates to fall, they have. If you've been waiting for the right time, this might be it. The window between now and mid-March offers the best combination of rate environment and inventory selection we've seen since 2022. By April and May, competition is going to intensify as buyers realize that rates are stable and they decide to pull the trigger and make their move. The key is preparation. Get a fully underwritten pre-approval before you start looking, not just pre-qualified, not just a regular pre-approval, fully underwritten. Sellers and listing agents can tell the difference and are expecting it, and in the multiple offer situation, it matters tremendously. If you're a seller, even if demand increases, it still boils down to proper pricing. Today's buyers are savvy and they understand value. They scrutinize every detail: bedrooms, bathrooms, square footage, condition, upgrades, location, lot size, year built. Yet price is the most critical factor. A realistic price will allow you to attract immediate interest. Overprice, and you waste valuable market time with far less activity before ultimately reducing. Sellers only get one shot at that first impression. The market is punishing overpriced listings immediately. Properties priced even just 5% above market are sitting 60, 90, even 120 days before reducing. By then, buyers assume something is wrong with the property, even if nothing is. If you're planning to sell this year, the spring market, March through May, offers the best opportunity. Demand's going to peak, rates are expected to remain favorable, and you have the largest pool of qualified buyers competing for the well-priced homes. Now here's the bottom line. Mortgage rates at 6% and local lenders even offering rates below that represent the best financing environment Orange County has seen since early 2023. This isn't a crash, it's not a boom, it's a rebalancing. And within that rebalancing are real opportunities for buyers and sellers who understand what's actually happening. For buyers, rates are cooperating, inventory is growing, and you have negotiating leverage you didn't have a couple years ago. But don't confuse balanced with easy. Well-priced homes in desirable cities like Cypress and Huntington Beach are still moving quickly. For sellers, demand is improving, but pricing perfection is now a non-negotiable. The market rewards accuracy and punishes overconfidence. Price it right from day one, present it well, and you're going to see activity. Overprice it, and you're going to watch buyers scroll past to the next property. The next few months matter. This is the window where rate stability meets seasonal demand acceleration. It's the moment people have been waiting for since rates spiked in 2022. Be sure to check out the full blogger article on this topic at 4realestatehelp.com/blog. That's the number 4, realestatehelp.com/blog. Thanks for tuning into this week's 5-Minute Real Estate Fix. I'm Chase with the Whitney team, and I'll see you around town or on the next episode.